You're with us here on BTTV. I'm Abha Bukaya. Let's take a look at markets and how they're doing today. At the moment, just trending a little softer despite the fact that we are inches close to that all-time high, of course, 18,763. That's what we're looking at as we speak. Mr. Chokalingam is joining us on the show, so I want to welcome him in and get a take on really how he feels things are building up. Mr. Chokalingam, great to see you. You know, we're so close to that all-time high, Mr. Chokalingam. We're bound to sort of cross it this week. What are your thoughts?
Yeah, I've been quite bullish in the short term for the last few months. But last 2 weeks, I've become a little nervous. It's mainly because of the monsoon. As of yesterday, the cumulative rainfall is in deficit to the extent of 37% as compared to long-term average rainfall. And secondly, out of 36 subdivisions, meteorological subdivisions, only 10 subdivisions have got normal or above normal rainfall as of yesterday.
True,
Which
true.
means roughly only one-fourth got normal rainfall in terms of geography. So this is giving me little fear. Although the agricultural GDP is very small, in terms of sentiments, it can affect the markets. And also, the rate-sensitive sectors like NBFCs, banks can be impacted quite badly if the trend continues for another 1 month.
So it's interesting you're saying that, Mr. Chokalingam, because we are already seeing pressure on the financials a little bit. Let's come back to that in a moment. Let me also focus on what perhaps is trending right now. And we've got IT and pharma reacting clearly to the action in the dollar. So we are seeing some amount of momentum there. In fact, that's the only pocket we are seeing any momentum in. Is this good enough news for you to relook at IT or pharma, or do you feel they've kind of run their distance and you'd remain cautious on some of those names, given the larger global context?
Yeah, the market, always believes in these defensives. When things like monsoon go bad, that's why you see some momentum in IT and pharma. Yes, nothing wrong in accumulating IT and pharma, but the point is that IT sector has been growing in poor single digit in dollar term. Right now, we saw the reports also that the hiring is 2-year low, which is an indication of quite low demand for IT services. So definitely, they may not fall badly in the any possible event of monsoon failing miserably. Therefore, defensive investors can consider IT and pharma sectors.
All right. And within the IT, do you feel perhaps it's the heavyweights that you'd continue to look at? And given the kind of action we've been seeing on the mid-cap and small-cap indices of late, would you also suggest whether it be IT or some of the other names that perhaps the broader markets might be the place to look now?
Yeah, I am little nervous on small and mid cap, so I suggested my equity strategy that reduce the exposure to small and mid cap, and IT in almost all the stocks were given a sell call along quite some time back, except just Sasken Technology, which is a small cap but a deep value stock. Otherwise, I am not that bullish on IT. Maybe to some extent one can look at Infosys. That is because it has corrected significantly. But otherwise, we don't have buy recommendation on even on any large IT stocks. And what exactly we focus is on some small names in pharmaceutical like Albert David. It's again small cap, but still I would suggest even in this environment to consider it because it has got a huge cash on the book and it's trading at a single digit PE. And I'm pretty confident that that company will create a good alpha. So otherwise, what I suggest is to focus on something like a renewable energy player like a Tata Power, which will not be impacted by failure of monsoon. In fact, when monsoon fails, idle power would come down generation in the country. Although Tata Power has some, but its major focus is on thermal power and other renewable sources. So the demand for solar and wind power would increase. So therefore, I would suggest Tata Power. And second, we have recommended a Coal India. It's a single digit P and a very high dividend yield. And again, if monsoon fails, the demand for thermal power will increase, and that will be positive for Coal India. So these are the some of the names I have been suggesting in this market condition.
Okay, interesting. Dr. Reddy is at a 52-week high, talking about IT and pharma. Let me just bring up some of those names as well. So from the pharma pack, it's really Dr. Reddy's in particular today that's seeing some action. I mean, it's at 4886, but it's hit a 52-week high, so some buy calls coming in there in particular. Mr. Choklingam, you know, the one thing you've said consistently in our conversation today is that you're nervous. So, you know, as you said, the last 2 weeks you started to get a little cautious. What would you advise investors to do then right now? Because you see, all of the news is positive. Markets at an all-time high, mid-cap and small-cap indices at their high levels. You know, fund flows are intact. Mutual funds are showing good returns. So how does one really, you know, does one book profits then at this point? Is that what you're really telling investors to do?
Certainly. I will tell you one interesting learning which I made from the market. Of course, it's a common sense, many people know. You know, the wealth is created normally from small and mid cap, but the fact is that in the last 15, 20 years, the small cap pack invariably corrects severely once in 3 years roughly, sometimes 4 years, sometimes in 2 years, and on average, once in 3 years, it falls very badly. Now, a sort of some correction is very much inevitable now. If what we saw in the last 18 days gets repeated even for next 18 days from the monsoon perspective. Because, you know, today the total market cap of Indian market, all, you know, the market cap of all BSE listed stocks is about 293 lakh crore. Let me tell you, this is a common sense, everybody knows, but rarely many majority stress this point. Even if you take 1% of the current market cap, it's close to 3 lakh crore rupees. And even if you take half percentage of that, you know, half of overall market cap, it's about 1.5 lakh crore. If somewhere, you know, the panic sets in and people rush to sell, just half a percentage of this 293 lakh crore, there is no appetite in the market to absorb it. You know, there is always a, you know, weak linkage between the overall market cap and what market can supply in terms of liquidity on a daily basis. So that is why whenever the fall came, whether it's a Lehman crisis or Corona, you know, COVID pandemic, we fell much worse. And our market cap, even in Lehman, 52% fall. That has to do with this weak linkages between overall market cap and, you know, the liquidity. And that is now again, you know, worrying me. 293 lakh crore is huge for, you know, the kind of liquidity the retail investors or domestic institution can bring in if there are any major adverse news. So therefore, to answer your question, this is a time for, you know, the retail investors to consider, you know, cut down the exposure to equity, at least 5-10% we should generate the cash. And one should not be excessively, you know, dependent on small caps, you know, in the equity strategy. So these are the two things they should adopt. One should have at least, you know, 50% exposure to large caps. This is for average risk taking investors, and 5 to 10% cash. And don't hesitate to book profits. Nobody can, you know, decide what is a peak price or bottom price. But based on the valuation, if you are happy, you start booking profit and at least wait for another couple of days to see how this pans out. Again, let me tell you, I don't want to scare on monsoon, because Indian agriculture sector contribution to GDP is only around 17-18% of the total GDP. Indian economy is very strong. It is in a formidable position to manage, but then stock market fundamentals are different. If monsoon fails miserably, then, you know, the fear would come, sentiment would be impacted badly, and then retail investors will start dumping the stock. And that is the time, you know, what I am saying, this weak linkage between liquidity and market cap will hit everyone. So therefore, you know, be little smart and, you know, have your strategy in clarity, at least for next 2-3 weeks.
Sure. Mr. Choklingam, you know, when you talk about the brunt of the monsoon hitting the markets as well, financials, for instance, I'm sure even consumer, talk to us about where you're anticipating the maximum hit, what perhaps we should stay away from for the moment.
Maximum hit obviously would come to, you know, the directly related to the monsoon performance. So the first one would be the agrochemical and the fertilizers. Worst affected could be fertilizer, because the government has already indicated cut down in the subsidy. But then, you know, it is estimated that the gap between the subsidy and what is really required by the industry would be huge. So on the with this background, if monsoon fails, the fertilizer would be the worst affected, followed by agrochemical agri inputs, including tractors, and then followed by rate sensitive sectors like realty and banks. Because we are happy to see even the negative inflation on wholesale price based one, and consumer price inflation also down. And there is a hope that the interest rate would peak out and start even falling, but a reversal of interest rate cycle would not happen if monsoon had to fail, and that would impact badly the realty space, followed by banks. So therefore, one should keep these four sectors on the top of the list for generating cash. But I am not saying that you should zero the banks, but you should one should realign the equity asset class and use this opportunity to create some cash. And particularly the NBFCs should be more affected than the banks, because NBFCs at the peak of the interest rate, their borrowing cost is much higher than the banks, and banks are eating into their market share in gold loan segment, which is becoming a dominant one now. And therefore, before selling banks, one should sell NBFCs, fertilizers, agrochemicals, even the tractor companies, and then take out substantial profits and small cap if valuation comfort is not there, without seeing whether it is related to monsoon or no. Because overall sentiment turns negative, the small cap will fall very badly. So therefore, based on the valuation, that is another space one should look at and start generating cash in the small caps.
Great. All right, Mr. Chokling, always good to get your advice on things as they stand. Thanks so much for joining us this afternoon. And that's where we leave it, with markets trading steady, but not running away to those new highs just as yet.